Good afternoon, everyone, and welcome to today's Payments Association webinar on the blurred lines of liability. How can all players in the digital ecosystem work together to put a stop to financial fraud? My name is Antonia Kahinde, and I'm the Content and Production Lead at the Payments Association. Before we get started, I'd like to go over a few things. First, you can submit questions to today's speakers by typing your questions into the Q&A tab of the control panel. Two, you can send in your questions at any time and we will address them during the Q&A session at the end. And by we, I definitely mean the panel. Three, you can ask your questions anonymously if you do not want your name attached, but please do not go too rogue. And four, if you have any technical issues, feel free to send a message through the chat box to Emily Beard from the Payments Association. I would now like to introduce Phil Creed, Director at FSCom, who will lead today's webinar. Phil will kick off the session with a fireside chat with Mike Haley, Chief Executive Officer at CIFAS. We will then move into the panel discussion where you'll hear from Pay UK, NatWest, and the Payment Systems Regulator. Hope you enjoy. Over to you, Phil.
Thanks, Antonia, and welcome everybody to the webinar. I think the webinar is really timely for a couple of reasons. One, sort of the title, which is what can everyone do to try and help fight financial crime and fraud. But in particular, I think we've seen over the last couple of years, particularly with COVID and how that's almost like rocket ship people's lives to moving online, that we've seen just a massive uptick in fraud being conducted. The UK alone saw a 71% increase from 2020 to 2021, which culminated in 583 million in APP fraud losses. The US, a similar 70% increase, but that was $5.8 billion. I think we can all agree that it's becoming more and more of an issue. And I think one of the things that comes from my background is it seems to be always something that we're playing catch up on. And the fraudsters change how they move and do things, and we can only work together to improve how we sort of preempt that. Antonia sort of introduced what we're going to talk to today. We're going to fireside chat with Mike Haley, the CEO of CIFAS, which I think will be fascinating, and then moving on to a panel session with Claire, David, and Alistair later on. But to begin with, welcome, Mike. Thanks for joining us. I wonder if you could give a quick introduction to yourself and maybe give us a bit of background on CIFAS and the work that you're doing.
Yeah, good afternoon, Phil. Good to see you again. I wish this was a genuine fireside chat because I'm freezing in my flat. So if you see me shivering, I hope it's to do with the coldness and not the aggressiveness of your questioning. Yeah, thank you for inviting me on to this webinar. So I'm the Chief Executive Officer of CIFAS. Now, CIFAS, we like to think ourselves as the UK's fraud prevention community. We're a not-for-profit membership organisation, and we bring over 600 organisations together to share data and intelligence and learning about fraud. So we have a single purpose, and that is to help our members prevent fraud. And we do that in a number of ways. And I think the most important way is perhaps that we maintain what's called the National Frauds Database. And that's on behalf of our members. And we also facilitate peer-to-peer secure communications between members. So it's kind of a trusted community. And that community, I say 600 organizations, but it includes all the retail banks, the credit card issuers, the mobile network operators, payments companies, and more recently, gambling and cryptocurrency. We've seen our first couple of companies join, and I think that's quite hopeful for the future about, particularly for this discussion, Philip, about how we bring together communities to prevent fraud. And the whole belief of CIFAS, I guess, and the kind of first principle, our founding principle, is reciprocity, that we all help prevent fraud by joining this club to protect each other. And reciprocity means that if you see a fraud signal, you see a fraud, you file it to the National Fraud Database, and then it's immediately available to help protect all the other members. So it's a reciprocal data sharing scheme, increasingly sharing not just data, but intelligence and also learning.
it's fantastic, to be honest. Like, I think we've been talking about data sharing in a number of aspects of financial crime, and the fraud database is brilliant at showing what good looks like, right? I wonder if we could start by thinking about, obviously we've seen a massive rise in fraud over the last couple of years, particularly sort of, turbocharged by COVID. So what are the themes that you've seen over the last couple of years? And moving on past that, is what trends are you seeing potentially moving into 2023?
Yeah, so I guess one of the benefits of having this data as a central consortium for data is that we get a really good picture of what's happened, but also for intelligence and the network of the members, we start to see what's expected as well. So last year we had something like 300,000 new fraud cases filed to the database, and we have 1 million fraud cases on the database. And now that's fraud that's investigated by our members. So we do some analysis on that, and we have something called Fraudscape, which is available for anyone. You don't have to be a member to go onto our website and look at what that tells us. What did that tell us? So last year, we saw a 17% rise in cases which were filed to the National Fraud Database compared to the previous year. And that marked an 11% increase even on pre-pandemic levels. So I think we've seen this kind of pandemic leap in fraud, or different types of fraud, but continuing into the current situation, which of course is being marked by the cost of living crisis, which I'll come back to. But if we look at the figures for last year, what did it tell us up till December? The biggest increases were in false applications and identity fraud. False applications up 45% and identity fraud up 34%. And the cases of false applications surged as individuals, first-party fraudsters, we might call them, altered things like bank statements or provided fake pay slips or tax returns to inflate their income in order to secure mortgages, loan products, or services. So we saw the kind of first-party fraud increase when it's becoming increasingly difficult to show that you've got the income. Secondly, we saw that more and more people were reporting that they've been victims of identity fraud. And what we saw there is that criminals were targeting those with longer credit histories, those that can illustrate good repayment behaviors over time and thought to be more credit worthy. So if you've got a good credit history, then you're likely to be targeted on identity fraud. So that's the majority of the increases. Interestingly, now 8% of the database comprises account takeovers. And account takeover is different, is that's really around organized fraud gangs. They're behind that increase in facility takeover, account takeover. And that's around when organizations, criminal organizations, obtain an individual's credentials so that they can take over an account. And we've seen that particularly increase in the retail sector and in the telecom sector. And the types of ways that credentials are being stolen were these the three kind of horsemen of the apocalypse. And I think there are four, but I'm going to take three, which are I would introduce the fourth later on, perhaps, but it's phishing, vishing, and smishing. Yeah, the fact that through our mobile phones and on our web and on our online accounts, we are now bombarded with increasingly credible-looking smishing attempts, SMS texts, websites, emails, and voice messages, and they're there to try to obtain our credentials, pretending, impersonating the bank or other organizations. And that combined with this increase in social engineering, that is the skillful way of either calling a call center. Call centers can be a real target for criminals trying to get further details, pretending they're a customer, or also to the individual to get their credentials, pretending they're from one of their banks or payment companies or credit card companies. So we've seen this account takeover increase. And the third kind of element is, for every scam that we see, for every fraud, there has to be a payment out. And that payment then has to go to an account that's under the control of a criminal. So we've seen particular change over the last few years from criminals who set up bank accounts, but as accounts opening controls have been stepped up, it's more difficult to do that. So they're targeting already existing account holders to persuade them to let their accounts be used to receive the payments from criminal activities. And I think 68% of the misuse of banking facilities had indicators of mule activity. So a pretty bleak picture from 2022 in terms of rise in application identity fraud, more account takeovers by more organized crime, and then a big money mule activity. But I do think we're entering a new period for 2023. So you did.
It's more positive, Mike, is it?
I wouldn't say it's more positive than that, but it is changing. And as the pandemic had an impact because people were remote and we had an increase in online attacks, I think in 2023, it will be about the cost of living crisis and how that impacts on fraud. So the types of things we're starting to see, and we think these trends will continue into 2023. First, so on first-party fraud, because I think the cost of living crisis will force a lot of people to make a choice about whether they can afford, about affordability. And in 2022, we saw already forced chargebacks increase by 172%. And we did some.
When did you see that come in, if you don't mind me asking?
When did we start that?
Towards the latter end of the year as
Yeah.
the cost, yeah.
Yeah, we've seen that, and I think that's the trend. It's increasing. So I see that we were likely to see more fraudulent chargebacks. I think I think that's pretty much a certainty. I just saw some research from SIFT just come out in December, where 1 in 4 consumers admitted to their survey to actually disputing a legitimate transaction to get their money back. So I think as that trend will increase as the economy falters or people are finding it's more difficult to get by. I think we'll also see a rise in refund abuse. I think on buy now, pay later, for example, where there needs to be a refund of a customer straight away if they dispute or want to cancel their contract. Whether or not you get the item back, I think there'll be an increase in refund abuse. I think we're seeing an increase in falsely claiming non-delivery of goods as well. We did some research, behavioral research. We do it every year. We kind of track kind of how consumers are becoming more or less fraudulent, if you like. It's a kind of an ethical questionnaire. And in that questionnaire we just did, 1 in 5 people admitted that they or someone they knew had committed non-delivery fraud over the last 12 months. So we're talking about 10 to 20% of the population who think it's quite fine to do these type of things. So
the population's what, and I don't even know.
Yeah,
now, 60, 70 million to know.
And if you think 30 million are economically active and taking credit, you can see how there's a larger number of people who are doing this, increasingly doing it, and will continue. So I think first party fraud, I think we got a guard against. But of course, criminals haven't gone away themselves. So third party fraud, we call it, criminal identity fraud, account takeover, card not present fraud. It's not going to go. That's not gone away, and very much APP fraud. The scams, I think, are all here, and will just mutate. We're seeing new ways of actually taking those forward by criminals. And then there's one new fraud that we have seen, which might not everyone had heard about. We're calling it triangulation fraud, and that's where criminals go online either on marketplaces or set up their own websites to offer discounted goods. They then use those to harvest information of the consumer and then buy those products on a buy now, pay later. So using the details they've harvested. Okay. Then they open a dispute with the provider and get the money back. And of course, they then keep on claiming the money from the consumer for the goods. So someone's obviously saw an opportunity to be able to triangulate. Arbitrage, and that type of innovation from a fraudster, I think we might see more of in the last year. I think they're getting better. We see social engineering. You remember the days, Philip, when social engineering was an email
yeah.
from a 4190, which was, and you used to say, look out for poor
grammar
and everything.
Yeah.
That's not the modern world, is it? The modern world is hard to differentiate between a communication from a genuine company, your bank, and what the scammers do. And I think this type of triangulation type fraud shows that they very much understand the payments landscape. They understand where they might be able to, as you say, do an arbitrage and articulate. So the bigger picture, we've had a tsunami of fraud through the pandemic, or an epidemic in the pandemic. What we're seeing now is a cost of living crisis drawing more first-party fraud, but also opportunities for the criminal, whether that's to take advantage of consumers who are in bad straits, or to go after companies because they're getting to understand more about how to get round systems.
It only takes a small vulnerability in a system, or even an understanding of people's, daily processes. I got a text message, I think last week, from Amazon, in inverted commas, saying, your package is coming. We have, I don't know how many packages coming from Amazon every week. So it's a safe assumption that it's going to arrive, right? So, and it just because I'm sort of, I suppose, conscious of it, that, but it was could have been a perfectly legitimate text message with a link which could then, do more damage. I wonder, we're talking with the payment association, and one thing I should say to the audience right now, if you've any questions for Mike, please put them in the Q&A board. We'll try and hold back sort of 5 minutes from this chat to deal with it. But if not, Mike's staying for the panel discussion anyway, so we can pick it up then. But what we've seen in payments and e-money is a rise in a whole host of new business models, like PISPs, open banking, nested services, which is sort of where we have wholesale suppliers of financial services to others. I wonder if you could sort of think about and what does CIFAS see in terms of fraud whenever it comes to these new types of business models? And are you concerned? Do you see the banks concerned about this, or any reflections you have?
Yeah, I think it's there are kind of three things I might say around that, and I think it's not all bad news. I think that what happens when you've got such a flourishing of innovation, new entrants to the market, new types of services, is for the criminal, it provides what we call a larger attack surface. There are more entry points to the system to be able to manipulate, and the criminals always look for the weakest spot. So as more payment initiators, for example, come on the market, I think there is some concerns around what's the information that's provided. Can you get the full context? So if you're in a bank, and I think Alistair might speak about this later, is that traditionally you can see when they enter into your system, what device they come from, what's their IP address, and you can start doing your own analytics to see if this looks like an initiation of a payment from a known customer. Now, when you put that kind of a step further, you're just getting an instruction from a payment initiator. The bank itself hasn't got full visibility. So I know that there's work going on with the payment systems regulator, UK Finance, and the working group to see whether we can get more information so that you can get an end-to-end view. But at the moment, you can see that there could be the advantage taken by the fact that you've got another step in the process, and that could open up. So I think some of these are theoretical risks. Some of it we are seeing, but are kind of low levels. But I do think this kind of blossoming, which is great for the consumer, also creates opportunities for criminals to see, well, can they open an account here? Can they test the processes for initiation over here? So I think payment initiation, and as that grows, I think what I'd like to see is them brought into the ecosystem as trusted partners to share data and intelligence, but also account, and those who help us with getting account information together. They have a whole lot of data, so they could be honeypots for where you could compromise data. So if I have an account service provider, I'm giving them information so that they can give me a full picture of my finances. So I think that again is opening up more data in one point. However, I also think that things like open banking were designed with security in mind. In fact, the fraud control network was created in collaboration with fraud experts at CIFAS. So I think when you bring in new systems with fraud and security at the outset, I think it can be built in a more secure way. But so, of course, there'll be weaknesses and things we didn't foresee. But I think the most important thing is that data and intelligence is shared across the payments and the open banking ecosystem, so that when someone sees something unusual or they suffer an attack, it's not to keep it to themselves, it's actually to say, oh, we never seen this before, we didn't see, we weren't envisaging this type of attack. Let's how did it operate, how did it work, let's share that information. In the kind of traditional banking, it's kind of well rehearsed that there are forums and communications, and I just think it's that we need to say that the ecosystem has grown,
It's bigger, yeah.
it's bigger, there's more to coordinate, there's more entry points, but let's include everyone in there as trusted partners to share data and intelligence. So I think that's how I'm seeing it. Yes, there's extreme risk, there's extra risk. It's no new fraud types we've seen, it's the same old stuff, it's still social engineering, it's still account takeover, it's still identity fraud. And also I think there could be other opportunities. Say open banking was an opportunity to actually build security in. I think also with these nested services, you say that you provide also regulatory and financial crime controls which are embedded, particularly for smaller organizations who might not have the experience perhaps, or startups the experience to go onto them. Rails are already a member of CIFAS, and I think they're seeing benefit. And I was very happy to see Modular connect with me, someone from Modular Connect yesterday. Okay, my message is that, we might be an established mechanism and seen as kind of banking focused, but I'm very much open to say the protection of the data that we have should be made available to protect startups, protect new innovative organizations, and you add value because you might see things that others don't see first. But I think it's also been a great opportunity, hasn't it, to kind of build regulatory and financial crime compliance into the frameworks. So I think that I'm not putting my hands on my head, tearing my hair out and saying, oh my God, open banking and new payment companies and the whole explosion we had in things like BNPL is creating new fraud risks. I don't think it is, but it could also be an opportunity for designing out fraud.
Yeah, and almost put it in the good thing about startups and the good thing about businesses that are more agile is that they're able to dynamically change what they do pretty quickly, whereas maybe the more traditional ones can't. I suppose I think one of the counters to people payments business, things like that, getting involved in CIFAS is maybe that they're a little bit nervous about how much it costs, or that sort of thing. Is there anything that you can sort of allude to there as to, like, there is levels, there is things that you can do with CIFAS depending on your size?
Yeah, certainly. And I think this is what fintech startups should be very challenging to established mechanisms like ourselves. So and make us change, to adapt to the new world rather than try to fit in with how we've always operated. I'll give you a good example where we've changed recently is that there's a whole kind of ecosystem growing up of identity providers, those who are creating digital identities. Now, one of the key data sets we have is the compromised identities, stolen identities. But we used to base our charging mechanism only on an annual subscription. So that's fine for established companies who see the value in using the data. But for a new startup, you might not even know how many checks you need to do, how many customers you're going to take on board. So we've moved to a kind of pay-per-click or pay-per-search method, and also to not pay until you start using the service. And that was because we thought it's important to extend the protections of making the data available. So we're very open to saying, well, how do you want it integrated? Do you want it integrated through an API directly? Do you want it through a third-party provider or another platform you work at? So we've very much opening up the delivery mechanisms, the distribution of our data through very many different sources, trying to be more agile with API integration, because many of the fintechs want an API, and they get best value from our data, to be honest, if you've got a direct API integration, but they want it snappy and they don't hang around. And also then you have things like filtering. What's the right data you want to check against? And that therefore to reduce your false positives by having checks against data which is not relevant to the sector. So my view would be come and talk to us. Talk to us about what your best charging mechanism might be, what value you're going to get. Do you want to do a test of proof of value to be able to see, first of all, does it work? And is it useful in your particular circumstances? And then when it gets to integration, what's going to be the best use of the data? So I think it's a great challenge to us to become a bit more agile as well. And it's already, I say, we're already making sure that we can open up to new types of business models.
Brilliant, thanks, Mike. I'm just going to turn to a question that we've had from the audience here, which is, how do you think criminals will sort of react with APP fraud reimbursement, the contingent reimbursement model? Could you sort of allude briefly? I'm conscious of time. Would you be able to sort of give your 2 cents on that, please? So
yeah, there's a lot to answer on that question. How will, we don't know how criminals will respond. I mean, there are a number of potential issues here, which could be that there could be moral hazard in the sense that individuals reduce their scrutiny of payments they're asked to do because they know they're going to get repaid, and therefore that there could be also collusion between those who might say, well, I pretend, Philip, that I nicked 10 grand from you, you'll claim it back, and then we split that. I don't know if we've seen a lot of this, but these are more fears of how a contingent reimbursement. So the CRM model is not there to prevent fraud. It's all about the liability who pays, and it's moving it from the end consumer to the bank, and now both the receiving and initiating pay, for the payment initiator and the receiving bank. What this has driven, it's an awful lot, and will continue to drive, is an awful lot of innovation. How do you spot money mules? How do you stop money mules? How do you push the fraud defenses up into the preventative area against social engineering? And I think we've seen a lot of initiatives come on, confirmation of payee, dynamic messaging when you set up a new payee. So I think there's a lot going on. I think it will drive innovation by the banks in particular, and by other companies and payment initiators to try to prevent that. I don't think the criminals themselves care as long as they're getting away with it.
Yeah, I know.
And that's one of the issues, that they get away with it.
Scary, it's kind of like, it brings you back to sort of like, I don't know, gangs running drugs, and but whereas fraud's actually seemingly a more lucrative market than using mules for drugs and things like that, which is crazy. Just one last question, Mike, before we move on to sort of the panel discussion. I wonder if you could allude to sort of any key strategic initiatives that firms that would be members of the Payment Association should be thinking about, both maybe short and long term. I know that's probably quite a wide question for a couple of minutes, but if you could try your best. So
I'd say there are 5 key takeaways, or 5 key things to think about in this environment at the moment. I think, firstly, to accept that every player in the payment chain, any payment process from onboarding, provisioning, through request to pay to authentication, execution, no one's immune from a fraud attack. And you need to do a risk assessment of your own business to see what the fraud risk is. I think that's the first thing to do. Secondly, I would apply stronger customer enrollment processes, including check-in, database of compromised identities. I think stopping a bad actor coming onto your platform in the first place saves an awful lot of problems later on. Thirdly, and I think within particularly startups and fintechs, I don't think it's prioritized enough in terms of expenditure, but investing in real-time fraud detection systems or not doing it is a false economy in the long run. So many organizations I see invest after the fact, after they've lost money, and now they're having to invest. It's going to happen, so might as well put the investment in. I think fourthly, there's simple things to do about educating your workforce about the fraud threats there are, and educating your consumer about what they should look out for, particularly what your security measures and the type of communication you would have with your customer, so that they can a consumer can more easily spot what is a good communication than a poor one. And lastly, I'd say, and it's to reiterate my point, is that sharing fraud intelligence with the rest of the community, the fraud instance you see, is crucial, because combating fraud needs to be a collaborative effort. We've got the same enemies, And they're always sharing information about weaknesses and about compromised identities. We all benefit from sharing that intelligence and about the latest fraud attacks and latest entities. So let's collaborate more, and let's make sure that all parties in the payments arena are brought together to be able to share.
Lovely. Thanks, Mike. There's some more questions, but I'll maybe put them to after
The whole
panel.
panel. Yeah, you've got the experts.
Yeah.
Now.
So with that in mind, it'd be great to welcome Claire, David, and Alistair onto the panel. If they could come onto the webinar. Just waiting to see if everyone's arrived. There we go. Brilliant. So this panel discussion, and thanks very much, Mike, for that chat, is really focused around how can banks, financial services companies, and big tech sort of work together to get ahead of the fraud problem. But before we jump into it, I wonder if you could all maybe just give a brief introduction to yourselves. Claire, maybe start with you, if you don't mind.
Yeah, of course. My name's Claire Simpson. I'm a senior manager in the policy division at the Payment Systems Regulator.
Brilliant. Thank you. Alistair?
Yeah, hi there. I'm head up fraud prevention response at NatWest, kind of covering technology, tooling we do, controls, and industry strategy and engagement.
Lovely. And David?
Hi everyone, my name is David Heron. I'm the head of standards at Pay.UK. Pay.UK owns BACS, faster payments and check clearing, and is building the new payments architecture, which is the new UK retail payments infrastructure.
Brilliant. Thanks, guys. Listen, we've got a few questions just to frame the discussion. Again, anyone in the audience, please feel free to drop questions in. We'll try and sort of react to them as they come if they're relevant to what they're talking about at the time, but otherwise we'll pick them up at the end. The first sort of question is, can the polluter pays model provide a fairer reimbursement framework that suggests joint liability of banks, digital platforms, and telecom operators for their involvement in the fraud ecosystem? Claire, can I come to you first?
Yeah, of course. So for the PSR perspective, so as I'm sure everyone's aware, we in September consulted on a set of policy proposals that look at mandatory reimbursement for authorised push payment fraud. I think the thing I would say about the polluter pays is that we are very alive and aware to the fact that a liability model that just includes the banks and looks at mandatory reimbursement from sending and receiving banks really is just part of the picture. Ultimately, I think we're all driving towards the same goal, which is a reduction in fraud. And I think it's how incentives work to help do that. And I know that in the previous discussion, we talked about the fact that, we're seeing a lot more preventative measures being put in place by the banks, and that's what we'd really welcome. But we do also recognise that, unless there are changes upstream, both upstream and downstream, actually, ultimately to deliver the outcomes that we want to see, more needs to change, both in kind of fraud origination and also at the enforcement end. I think it's looking at where we can support shared objectives of government, the regulators, and these industries to look at the whole ecosystem together. And we are really open to that, and we do understand where the proposals that we've put in place kind of fit within that wider picture.
Lovely. It sounds like a hard thing to get a nice balance on, right? David, perhaps I could come to you next, if you don't mind, from Pay.UK point of view.
Yeah, sure. So the other thing that Pay.UK is a standard and rule setter for the services that it offers, and Mike, you touched on some of them earlier on, confirmation of pay being one of them. So it's really key that that we can set standards and rules that work for people in payments. But equally, there are limits to where our oversight and the ability to enforce kind of sits. So I think for me, there's probably two or three things. The first is it's important to see how the landscape lies across the entire payments chain. Again, it was kind of touched upon in the fireside chat, and where that oversight sits. I think, you know, we've got some major regulators in the UK and they have good links internationally as well, but it's not always clear kind of where that oversight necessarily sits, and certainly making certain operators or other entities responsible for things where it might not necessarily sit. It is very challenging. And I think as part of that, it's being able to have sight. There's no point in necessarily having responsibility if you don't have sight of that, or you don't collect data, or indeed, quite fundamentally, you're not empowered to collect data. So it's all well and good saying we can pick this information up with data from these types of entities. But the reality is, if they're not obliged to give it, then it can be very, very challenging to do so. So I think it's important to see where that landscape is and understand specifically where oversight and ability kind of sits and where it possibly needs to be re-energized. And that's not just within the UK. I think it's cross-border as well. And I think when you think about some of the major initiatives that are coming out through the FSB work, the G20 FSB work around frictionless cross-border payments, I think that becomes even more kind of complicated in that sense as well. So that's what I probably think about from a central operator's point of view.
Yeah, from a payments perspective, you know, the fraud reporting is very, very high level and probably not that worthwhile. Alistair, pushing on to the next sort of question from your perspective at NatWest, it'd be lovely to sort of hear what you think, and maybe we'll follow on the next question to you too.
Yeah, sure, Phil. I mean, Claire mentioned it, incentives, and I think of incentives as carrot or stick. Polluter pays is certainly in the stick camp, taking us down the liability route again. And I think there's a lot more can be done on the carrot side around working with the other sectors, explaining how scams originate, the whole anatomy of a scam from cradle to grave, and how can we stop it? Because prevention is obviously far more important than ending up with reimbursement. You know, we've got the code. Lots of thousands of customers, tens of thousands of customers are better off because they've been reimbursed, but unfortunately, hundreds of millions more have gone into organised criminal hands. So prevention has to be the answer, working hand in glove with the sectors where we can. And if that doesn't result in change and regulation doesn't result in change, then polluter pays must be on the table.
Lovely. We've got a reasonably brief question here, but should banks actually have to label the fraud sources? Do you think that would do any good?
So I take labelling being to define what the source was and the mechanics of the scam. And I can't talk for all banks, but certainly it's something we've been doing for a while, because it helps us to tailor and trim some of our messaging. If we know the kind of characteristics of a payment and it looks similar to other payments by source, then we can tailor the message accordingly. And I guess from a more industry engagement perspective, these are stats that we're asked for quite often from regulators or from government as well, on what proportion of scams you see coming from emanating from big tech platforms. Last quarter, 53% were started in Meta.
All right. Mike, same question to you, probably as the owner of the data eventually.
I think it's actually really important, and then go a step further than what Alice is doing to see whether we can bring that together across industries, because seeing how the whole ecosystem works and how a fraud is initiated, we know social media companies, a lot's initiated on Instagram, on Snapchat and others. As the online harms bill comes in and starts providing liability to the social media giants, we need to hold them to account to make sure that they are investing in preventing these type of false advertising or messaging. So actually be able to have the statistics to be able to say, well, actually it is your, it's moved to Twitter or it's gone to LinkedIn. We see all the social media sites then, but I think bringing that together and labeling it. But I think for social media and telcos, because I think we see different telcos at different times being used more by criminals. They might have insiders, for example, you can detect because SIM swap has become a real big issue. So I think if we're now moving from this as being just a banking issue to being a broader liability issue. Yeah, and I kind of agree with Alistair that there has to be some stick And I do think the online harms bill and this kind of polluter pays model, but there was also greater collaboration occurring and over the last 18 months with initiatives such as the Stop Scams initiative, which is bringing social media companies, the banks and telcos together around the table to try and look at solutions. I think that's the best way of getting quick solutions is through the collaboration. And I'm increasingly seeing people like Meta, Western Union, and telcos around those tables at broader fraud and financial crime events. And I think that's a really good move. But yeah, if we got the data, then you can start putting pressure on people. So I would suggest labeling, but then also creating a consortia of that. What do we see across the whole piece?
Yeah. Alistair, you sort of brought up big tech there and social media and all that sort of stuff. What do you think they should be doing better?
Look, I think it's very similar to the way the banks have approached this and understanding and breaking down the scam to its component parts and various stages and understanding what defences could we put up at the very beginning to kind of disrupt that activity. It starts with identity verification, digital identity, moving through into patterns and activity that looks anomalous on the platforms. I'm sure that these companies have the technologies to do this to a large extent, but some still gets through. So, it's probably, as we've been doing, sitting down with the fraud experts from these companies, explaining what we do, how we operate, what data for us is important, and trying to kind of mirror that into their organisation. It comes back to prevention is better than detection is better than liability.
Yeah, they have the opportunity, like in my view, to actually, like, we're almost indicating that they should be doing customer due diligence at the front door. I can't actually see them ever doing that, unless it's regulated at a global level. But actually, for example, LinkedIn, Facebook, whatever, they know pretty much where you live because you bought a coffee down the road or whatever. They've got so much data there that could be utilized to verify that is actually that person, without maybe going to that degree. But David, what do you think big tech firms should be doing better?
I kind of echo Alistair's comment there. I mean, and actually what Mike was saying in the fireside chat, I think there's about a huge amount of due diligence and monitoring that needs to be done by the next person in the chain. If you think about, some of more broader than just payments, some of the third-party assurance expectations of regulators, for example. To my mind, there's no reason why you couldn't deploy a similar type of approach here as well, right? It is about everyone having responsibilities in that chain. Mike touched upon onboarding. Alistair, you've just been talking about the big tech firms where there's a huge amount coming through there. So, yes, I appreciate that's quite a simple way of looking at it, and there will be different complexities within that. But it's back to my earlier point: responsibility needs to be shared, and everyone needs to play their role in that chain. I also think that you touched on verification. It isn't just about someone's ID. It can also be, as you just touched on, Phil, actually, just taking different forms of information. So for the NPA, the new payments architecture, we're moving to this global data standard ISO 20022, which in short is just about an improved quality and quantity of data. And it's not just for clearing and settlement of payments, but it's remittance data, it's identifiers, it's tracking references. It's as much more broader than interbank payments data. It's about opening up data more broadly for businesses and personal customers. So I think that there's a way of, when you think about a payment, for example, there are different facets of data that could be brought together. For example, remittance data, for example, a reference number, an identifier, tracking reference, which could validate and authenticate, underline the authenticity, should I say, of a specific payment and verify that is a true payment rather than the scams that we've kind of seen before. So I think it's bringing different pieces together. We just kind of touched upon it, where you can sort of draw those dots and say, yes, this is authentic. That's what I think is really the kind of case that we can do here. But certainly there are about responsibilities by each person in the chain. And then on top of that, it's knowing, well, who regulates that and who oversees that?
Absolutely. So, to be fair to our membership here, which some of the best sort of anti-money, we do a lot of anti-money laundering audits on firms in payment services. and the best ones have their money laundering controls and their fraud controls smashed together, and authenticating that, through IP, looking at IPs, looking at all of that on a per transaction basis, means that their money laundering, risk goes down. They stop at its source. So some of them are absolutely brilliant at that. In terms of like the next question, we've got cross-sector and cross-border data sharing and fraud identification. There's obviously implications for data privacy and data security. It's obviously the counter argument to that. Mike, how would you deal with that?
Yeah, so I think we've got a challenge to go beyond the established data that we've been sharing across sector already to fraud signals. So I think that before, when there's information where you've reached a certain standard of investigation, there's a clear gateway to share information. But I think we need to look very hard about the signals of information, the fraud signals, which we can share across ISPs, telcos, and banks in particular, and across the payments ecosystem. For example, there are moves to create a shared signals database for identity providers. And that's part of the digital identity standards. And I think there should be something similar in payments. And because the lesson in the credit industry, who've been sharing fraud data for much longer, is that those outside of those intelligence and data sharing arrangements are the ones that are targeted by criminals. So I think that there has to be cross sector data sharing. For me, mobile number intelligence sharing is really pivotal. I'd even go as far as saying that if banks could ingest certain intelligence in real time within transactional journeys, you could disrupt the modus operandi of a lot of scammers, checking against like victim data, where when a new beneficiary is created or where there's a payment over a certain amount. So bringing data we do have into the transactional journey. So I think there's an awful lot of intelligence in mobile network operators, probably also in social network operators, or that might be more tricky, I think, to get. To put a context around, say, a scam call, to be able to identify whether someone's on the line with a scammer. That's the type of technology being looked at now, but also where's the destination account, who controls it, what's happened in the past, has there been other scam money gone into particular accounts. So I think I think quite a lot of the solution to this problem is being braver about what we can share, identifying specifically what we share across sectors. And I think we really need to escalate and accelerate the sharing between mobile operators and banks, and find ways to do that. Now, there are ways of doing it which on established means, and there might be other technologies that we need to use, and we used to look at privacy enhancing technologies. There's a lot of innovation in the fraud space for us to actually look at, which can help facilitate greater data sharing. But for me, it's definitely one of the most important preventative initiatives that we need to do.
Lovely. Claire, maybe ask you the same and then follow up with Alistair. Claire, what do you feel about the dimension between data sharing and data privacy?
I will come to that question. I just wanted to wholeheartedly agree with Mike's final point, actually, and it may seem a little unbalanced, but as the payment systems regulator, we're obviously quite focused on the payments industry and on what they can do. But I think one of the things that we've observed is how critical this data sharing piece is, even within the payments industry, but certainly being able to enable that across other industries. I think it's in some ways unfortunate for the payments industry, but the position that they play in the kind of journey of a fraud is quite unique, in the sense that there's no other part of the chain which gets to see both sides. So when the payment's made, when it's received, and the information that's contained within that. And I think that in order to move this conversation on in terms of data sharing, there's more work to be done in the industry to understand what we can share and what we're able to share, and what the limits to that are. And then also what information other industries need to be able to kind of drive this conversation further. And I guess one of the things that I've seen over the time that I've been working in this area is an awful lot of conversations like this, and it's getting to the next stage of actually looking at the right types of solutions. And I'm not suggesting that there is no work going on. We know that there's a lot of work going on. We're involved in a data sharing activity with UK Finance and other bodies. So I'm not suggesting there's nothing, but it seems like a really key unlocker that we just can't seem to, at a strategic level, quite get past some of the fundamental questions.
Yeah, we've been talking about it with, say, like suspicious activity reports for a long time, which is obviously a key data point, which would be very useful for a number of people. Alistair, sort of over to you. Are we too precious about data, or should we need to be respectful of it? A bit of both.
Certainly a bit of both. I mean, but I think there's things that we're looking at, and I think Claire maybe touched on it. This kind of ability to build on things like confirmation of payee and have more data being exchanged between the sender and receiver would be a huge step forward in the way that we can determine if a payment's got trust or payments potentially suspicious. I think as a general point, the perceived barriers aren't really there. They are there. We can share data. It's probably trying to change the mindset in organisations to create more of a will to do it. There is a bit of a mentality sometimes that if I don't share, I won't be sued. And we need to modernise some of that thinking.
Yeah, I remember in the US they had an embargo against transaction monitoring, so they were allowed to go back, I think it was 10 years, with new transaction monitoring systems that were better and pull out any of it was, and they were, the financial institutions weren't allowed to get pinged by the regulator for it. So maybe it's something along those lines which would help. To sort of come on to the next question, what are the short-term strategies that banks, big tech and regulators can implement now to reduce fraudulent activities and subsequent financial losses? Claire, can I come to you, and then I'll follow up with David, and if Mike and Alice want to get involved, that'd be great.
I won't repeat what I said at the beginning, but as everyone's probably aware, we're waiting for new legislation in order to put the mandatory reimbursement process in place. And although that is, on the face of it, focused on liability, ensuring that customers get their money back where they're a genuine victim of an app scam fraud, there is, the driving intention behind that is to start to set different types of incentives on the industry to be able to properly address and prevent app scams in the first place. This is by no means a short-term measure, though. This is a long-term measure. We don't think that in the immediate term it will reduce app scam fraud, but we think over the longer term it will. But we're already seeing, quite a concerted effort from the industry, and we're already seeing the impact of things like confirmation of payee. So I think there is plenty that we can be doing. And I mean, data may be one of the areas, but we're really keen to have conversations about where regulation can help to unlock some of the challenges that the industry is facing in looking at putting some of these things in place.
David?
Probably just a couple of things, really. The first is going under the bonnet and seeing what existing data you have. That can be a scary prospect, I think, for some firms who have over time bolt on different systems. But I think quality and updating of existing customer data, be it personal customer data or indeed corporate customer data, is correct. And then second, it would be remiss of me not to push on, moving to the global ISO 20022 data standard, because I do genuinely think that with enhanced data and the ability to standardize that, and I think all of the people on the table have been on enough, I've been on panels with you before around, data sharing. It's the thing. To Claire's point, there's been a lot of talk about it, but so what? And actually, standardizing data, which to me, you define a structure and a format for how that's sent, so that when I send it to you, Claire, you get it in the same way. And then secondly, and probably more importantly, I define the same usage of that data that you do. So if we take, for example, how long have you been a customer of my bank for? Well, if you've had a mortgage for 25 years, that's one metric. But if you've only had a mortgage, but only took out a current account 2 years ago, that's a different interpretation. So I think the use of standardized data and drawing out real use cases beyond payments and the economies of scale that you could get with enhanced data, I think would be a big push.
Lovely, Mike. I can see your hand up there. Do you want to come in?
No, that's me pressing the wrong buttons, but I will. If you're asking, if you're asking what's the
You didn't listen to protocol.
short-term strategies, yeah. I think there is. Alice mentioned about a change in mindset. I think we need probably a change in mindset around friction right rather than frictionless, and actually thinking around when is the right time to slow down the payments process to be able to protect the institution and the individual. So I think that's something I think that can be done. Secondly, consumer education, get across the industries and across government to be able to have consistent messages at the right time, and it needs to be more broad than we have it now. I'd bring it into schools and workplaces, because that's when you've got people who are actually sat down and having to listen to messages rather than the heavily mediated world we live in. And thirdly, on the data sharing, just everyone using the range of verification checks, data points that are available, even within organizations, IP addresses, devices, behaviors, are ways of identifying transactions which should be then subject to various further checks. So I think there are things that can be done now which are on the trajectory as well.
Lovely. I think Alistair is following protocol because he does have his hand up.
Yeah, I was so impressed with Mike putting his hand up. Because I get back to the question around working with the tech companies. I think there's a lot we can do to learn from what we did 3 to 5 years ago, or started that work with the telco through UK Finance, and Stop Scams UK have got involved in that as well, where we've understood vulnerability and we worked together to tackle it. Things like Fishguard or Do Not Originate, all the things to tackle smishing and CLI spoofing. And there's another stack of things getting done. So I think building on that for the tech sector is where we should go, and hopefully do it in a way where we can acknowledge that we're dealing with the same customers here, the mutual customers. So the telco customer is our customer kind of thing, and recognizing that rather than at times trying to commercialize fixing a problem within the sector.
Yeah, I couldn't agree more. Listen, guys, I'm going to move on to some questions from the attendees. The first one here, which apologies, I don't have my glasses on, I'm slightly blind. Account muling could be stopped tomorrow if UK banks make clear to their customers that they cannot accept a payment for another party, and if they do, they may well be money laundering and face prison time. Only once this is done by banks will courts start properly prosecuting and jailing account mules, and only when will the police start arresting account mules instead of letting them go unprosecuted. Why are UK banks not doing this? Alistair, are you okay to take this one around account muling?
Yeah, look, there's a lot in there. It's not a simple problem to solve at all. I mean, the mules that banks typically see are all shapes and sizes. Young people being naive, older people being vulnerable, people who are wittingly involved in the process, and they're all very different. Lots of banks communicate warnings, do particular campaigns, certainly around student campuses, for example, and warn of the dangers of this. And I take the point about accepting money into an account on behalf of somebody else, but it happens genuinely in many cases too. I think law enforcement, very difficult, but there is work afoot to try and concentrate efforts on the mule herders, the level above the mules, to try and kind of take out that level of organisation if we can. And then it becomes an issue for not just law enforcement, but then the Crown and having the capacity to prosecute and sentence. So it's not a simple fix, I'm afraid. But
it's not
lots of work being done to try and combat it. Certainly.
Yeah, it's definitely a scary aspect. I think would implementing biometric authentication for online payments limit the number of online payment fraud? I suppose the short answer is yes, but does anybody want to elaborate on that?
Yeah, very simply yes for fraud, but no for scams, because payment's been authorised. don't mean to make it sound simple, but a lot of the fraud defences that were in place years ago to pick up fraud aren't effective in picking up scams because the device, the behaviour, the payment pattern, getting to the customer.
Mike?
Yeah, I agree that it certainly would in the short term, but we have to be cognizant of how the fraudster will respond to that. And having multiple ways of authenticating. We're starting to see these deep fake technologies around voices and faces even. So yes, I think it does in the short term, but there's never a panacea. There's never a silver bullet. It would just be then how do we respond to that? So I think there's a range of authentication, but biometrics I think is part of the future of security around account opening and payments.
Absolutely. David, this is maybe one for you. What do you think about the EU proposal to implement IBAN-name check on instant payments? Is sort of elaborating to your data point earlier.
Yeah, so what I won't do, I won't go into individual fields. What I would say is, as a standard setting organisation in the UK, we do link into what's happening globally as well. And so we are plugged into what's happening at SEPA. Yes, the IBAN can be used as an identifier, absolutely. However, there are other points around identification and verification of a payment as well. We have similar conversations in the UK around purpose codes, which just are identifiers for purpose of payment. These will not, again, as was kind of noted there, they're not, these individually are not panaceas to do it. But together, I think certain data points, you build up a picture that then validates or verifies. So yes, it could be, but it is certainly not the only way that we would use a data field for an identifier.
Lovely. A lot of what we're talking about is pushing on to like the future and what can we do to make things better. If I can maybe ask each of you individually and putting you on the spot a little bit here, is what from your experience in working within fraud in the past has been the sort of biggest movement of the needle? What has been something that you've proudly implemented and seen a real tangible benefit? Claire, can I start with you?
So I'm speaking on behalf of the PSR rather than personally, but I think for us it would definitely be the CRM code and the move to that and the shift that had in the industry, and also confirmation of paying. Yeah,
and confirmation of pay is a great one. David, maybe yourself.
Yeah, so I'm also going to use the same caveat. I'll talk about the organisation. In fact, actually, I'll say something that we are doing right now. We are working closely with UK Finance, and Claire, you touched on it with data sharing, but specifically, we are working on standardising existing customer data that could be shared. So again, that's structuring the format and it's structuring the specific definition and usage. Working with fraud specialists, and the idea is that hopefully in a couple of months' time, we'll be in a position to publish that, mapping it to ISO 20022. So again, this is just important about how you exchange that data. You can send data already, subject to kind of legal bits and pieces we spoke about, but actually getting that data ready to use and do the analysis is the key bit, rather than messing around trying to manipulate it, etc. So it's certainly from my perspective, it's the fraud work we're doing that we're going to roll out more broadly, and then actually working on developing a common API standard and environment that people could use to exchange that data.
Lovely. Alistair, what about yourself? What have you seen sort of the best developments in the last 5-10 years?
Yeah, so look, I think detecting fraud is one thing, detecting scams is another, where it's 1 in 12,000 or 1 in 15,000 payments is a scam. The thing that I'm probably happiest with is where we've moved some of our detection tooling from being quite rules-based to using machine learning and technologies like that to profile the specific customer in that moment. So it's not about a rule, it's about that specific customer and what looks different about their type of payment at that point in time. So that's borne a lot of fruit. It's been good, and we've just got to do more of that type of really detailed analysis to get to the 1 in 15,000.
I think that must have been some job in NatWest, to be fair, to move from sort of I presume rules-based, like population, how anyone operates sort of outside deviations, to specific customer. Can you elaborate on that? Like how long did that take to implement, and is it still going on, is it?
Well, I mean, I would say it's probably covering about 95% of payment traffic now for non-plastic payment traffic. You know, the kind of plastic payments and chaps and so on across different channels. Other banks are doing the same sort of thing. Not straightforward implementation, and you're putting more. To Mike's point, you're putting more friction into the payment journey. You know, friction is good in this situation. So, yeah, I mean, a couple of years' work is still ongoing, and it'll continue to evolve, I expect.
Lovely, Mike. What developments have you seen over the last, 5-10 years that you think has been a real game changer?
Maybe it's 10 or 15 now. I think it seems 5 or 10 always, doesn't it? Until you get a bit older, and then it feels like it's some things are gone. But there's been really great technological improvements. If you think of chip and pin, 3D secure, there've been game-changing technologies around card fraud. I think the challenge is, where's the chip and pin moment for APP fraud? And at the moment, I think it seems that there isn't one that beckons. There is a lot of different layers that we need to put on. I think the things that we can do immediately is start looking around sharing scam victims, so scam victims aren't repeatedly victimized across different accounts. So that's about, again, a different view of data sharing, that actually sharing information across organizations around customers and the risk that they face, the risk they pose, either to themselves as a victim, but it also could be about money mules. So we're looking at customer monitoring solutions, but there comes with a strong privacy element that you have to bear in mind. And the other thing I think will change around identity verification is around digital identities and how you can give control back to individuals around their own identity to stop the impersonations and the account takeovers. We're working with a number of banks and other organizations around a kind of identity prevention product. And I think that could be game changing. These don't happen overnight. I think that's a couple of years off. But I kind of have, in the long run, I think we have provided good solutions to things like card fraud. And I don't think that this is an insoluble problem. It just needs us to put our minds together and take some risks.
Brilliant. We've talked a lot about data sharing, and I think one of the big problems with data sharing is sometimes a lack of context, but also people can use data, and that can be sort of be used to racially stereotype or anything like that. Whenever you're trying to actually sort of bucket people into certain things that maybe promote other activity, that's obviously a massive concern. There's a famous story from, I think it was Google, that built an algorithm to hire people, and they ended up hiring middle-class 25-year-old males over and over again. So is that something that's on your guys' agenda, and something that obviously we're all keen to avoid? But whether what are your thoughts on it? I suppose Claire, could start with you. Is that a hard one?
This is something that we're thinking about when we are thinking about the types of things that payment providers and banks might do in response to the mandatory reimbursement. So I'm not suggesting that there would be deliberate activity, but there is going to be a real need to understand customers and customers' behaviour better. And we talk to a number of banks who show us the kind of type of analytics that they're doing now, that Alistair referred to, and it will help inform decisions that they make about potentially increasing friction on accounts where there's suspected activity. And we would want that to be done in a way that is fair and balanced and isn't open to abuse. But I think that's where it comes down to ensuring that it's a sophisticated level of insight that is being used to make decisions and take actions when it's related to a customer and a customer's account.
Absolutely. David, would you have anything to add to that?
Yeah, I think it comes back to the original point I was thinking about with regards to oversight and enforceability, and the ability to collect data on that fundamentally. Where that, from legislators and governments, decide where that sits, and you could say, for example, in payments, you could say, well, it is the operator, and there are certain aspects when the operator should be able to do that. But equally, there are other aspects where the operator does not have access to the data. So giving someone a responsibility to do it, unless they're able to access that data and empowered to get it and act on it and enforce it, is difficult. So that's what I think it's key just to be very clear where the responsibilities lie, and then ensuring that that person or organization, should I say, is empowered and has access to fulfill that responsibility by collecting data.
It's almost like the more data you can collect, the less that becomes an issue, because it's more you've got more data points to reflect upon, right?
But with collecting data, of course, you then infer liability with that as well, and that's a big thing that also needs to be the flip side of the coin. If you interfere with it, and I have a physics background, but I've forgotten, maybe it's Schrodinger's cat thing, but or Heisenberg uncertainty principle. But as soon as you look at the data, it's moved, right? And there's something, and there is a liability that is inferred on you, whether it's right or wrongly, that you have access to that data, and you therefore should be doing something about it. So it's a careful game that one has to play when having that. So you're right, having loads of data is great, but people might expect you to do something with that.
Absolutely. Alistair, from NatWest perspective, I'm sure this is something that you need to be cognizant of.
Totally. I mean, any kind of stochastic model goes through an enormous number of hoops before it's live. Very wary of things that have gone wrong in the past with others. So it's a kind of recognised standard with us, and I'm sure again with other banks, that any model implemented is going through rigorous checks before it's put into line, and will become more so. I think there's legislation coming with data bias, so we'll be alert to that too.
How do you manage data, Mike? Because you get loads of data submitted to you. You must do some amount of filtering to ensure that it's accurate, that it's good, that it's before it goes in, to wider public consumption, I would guess. But maybe you can elaborate that.
Yeah, I mean, we're basically a data governance scheme operator from consortia data, and then we set a number of data matching rules on it. And I would push back against those. There's a lot of people in the data privacy community or lawyers in organizations who think data minimization means that you share the little as possible, but it's really about sharing the most appropriate data, because sometimes you need more data to be able to ensure that you protect the innocent party. You don't mix them up with somebody else. And we've seen even twins with same dates of birth, we actually have the same first and second names. You wouldn't believe it, it's only the middle name that's changed. So the more data you have there, the less that you actually can impact on innocent parties or on transactions, because you don't want to interfere with genuine transactions. We're trying to find the needle in the haystack, and therefore I do think that machine learning AI is a very significant part of future fraud prevention strategies. We have learned an awful lot of lessons from mistakes in the past. A good example is facial matching. We have a facial matching capability. If any member uploads a document or a photograph of a face, it matches against any others, see if it's a bad actor face. A few years ago, there was quite a lot of controversy because there was bias in the facial matching, and also a high false positive rate. And now we find that with a feedback loop from members who will look at the two, we would do the matching, it goes back and they look at it and go, yeah, that's the person. We give you a marking of 5 out of 5 because it's definitely the same person. So building in some tests like that has meant it's hugely successful. So if we'd just given up 5 years ago because there was some bad publicity about poorly deployed facial matching, we wouldn't be having such a success with facial matching. Same with machine learning, artificial intelligence. Being conscious there could be bias, testing it and making sure that you change. But I think it's going to be a really important part if we are going to get to grips with increasing numbers of payments, transactions, accounts, and a broad variety of them. We're going to have to use machine learning, particularly in data science, but absolutely we need to balance that up with rights and responsibilities to the individual. But my view is we can actually, by not sharing data, enough data, we can end up with very poor models. So this is where I think we need to be brave in the community who are trying to share data to prevent that. We take our responsibilities seriously, but we don't shy away from that, having a discussion that more can lead to better outcomes, including protecting the innocent.
it's very topical at the minute. Like consumer duty is high up on most financial services firms' agenda, and that's about focusing on customer outcomes, right? And making sure that the outcomes are correct for that customer, whether it be negative or positive. I've got a question here for David. There are different types of issues with APP scams and the online marketplaces just not having adequate obligations akin to e-commerce, which introduce high volumes of scams. Will the MPA be able to cater for the online marketplaces?
So, in short, that is the vision of the MPA, and that I think was the original PSF Payment Strategy Forum blueprint back in, I think, 2017 envisaged that. However, the phasing in and introduction of these as we move towards the MPA needs to be done in a way that works for everybody. So and that's not my role to necessarily do that. We have central communication through Pay.UK to communicate that. But ultimately, yes, as part of an overlays approach, that's the kind of thing we would hope would be envisaged. But what I would say is we're doing a lot of work before that so that people aren't thinking, well, I've got to wait till I get to the MPA before I do any of that. No. Back to my earlier point, we're doing some stuff with UK Finance already, thinking about how we can incorporate with FPS, thinking about how we can have set up APIs already that can start working with a future lens to how that might incorporate in the wider thing. So yes, it is. It's just when that actually comes into play is a key facet we're looking at.
Mike, you've got your hand up again. Hopefully it's protocol, is it? Don't think it is.
Attempting to navigate and answer a query that came up, which is specific to us. So
right,
it's
okay.
Clicking on the wrong parts. But,
okay, cool.
Nothing to add to David's answer there.
Great. Well, listen, I'll ask that question to a chap who previously worked in motor finance. They were getting a number of complaints regarding markers that they placed in people's files. 90% of those were correct, but I think every single one had to be investigated. I think is possibly the issue that they're pulling up. That's fundamentally it, Mike. It is, there are markers, they're getting complaints on the markers that were there as an early startup, not lots of resource, and they're wondering if that's something that CIFAS would be envisioning helping firms with.
It's a very interesting point, and I don't want to get too parochial about the operation of CIFAS as a scheme, but generally with data schemes where you're sharing data, it comes with the ability for individuals to ask for data subject access requests, to have fair and transparent complaints processing and challenge data on the system. So I think to have any data sharing of private info of personal information, it comes with GDPR requirements, and that therefore comes with an overhead to both the data sharing organizations, but the organizations that do share that data. So you can't get away with those responsibilities. So if you file data to our system and share that with others, it has to be accurate, it's got to be investigated, and if you have a complaint, you've got to look into it. I think here it's more a question of how do we support fintechs and startups who might not have the infrastructure to begin with. I think that's something for me to take away and maybe talk about. I'm happy to have conversations with anyone who thinks they should be data sharing, but recognize that there's a cost that comes with it in terms of the overhead to the company, which large organizations may have in place already because they have complaints processes, etc. You can't get away with it. It's an overhead of sharing private information that there's a right to request for your data to be removed from any system. There's a requirement to have access to what data we hold, and it's quite a complex process of deciding when you can provide the data, which is in most cases, but also we look at AML legislation, whether there might be a risk of tipping off, whether there's any law enforcement investigation going on. There's quite a lot of complexity around even data subject access requests. In short, Philip, if anyone wants, if that's a barrier to them sharing information, to come and speak to us and see what support we can give them. And I think there's a couple of questions that came through around in the payments area. A lot of startups who perhaps want to do the right thing, want to be part of broader data sharing schemes, but haven't got the the infrastructure to support it to begin with. And I think, yeah, we definitely need to be sharing it, because I think it's helping them, because it's in everybody's interest. So if they detect a fraud which would have gone and bitten Alistair's organisation on the backside a week later, he's getting the protection from them coming in and sharing.
Exactly.
And I think that's what we really want. We will get over those other barriers, but do come and speak to us.
Perfect. I think we'll have just one last question, which will go around to everyone, and maybe if you could think of just things that you'd like people to take away home with them from your perspective. And I'll not read the full question, but certainly the last part of it's probably the main crux of it, which is, like, we all agree that data sharing is key, which has been a theme throughout our conversation here. What's the main challenges, do you feel, to actually getting this done? Alistair, maybe I'll start with you from a banking institution's perspective.
So look, I think sharing between banks is something that's long established, good protocols, boundaries have been pushed to an extent, and then we kind of hit a point where we're all kind of comfortable. I think it's kind of now moving beyond that into where there's value in cross-sector sharing, as we discussed earlier, and again within the bounds of privacy. I'll go back to what I said earlier. It's about the will to do it in organisations.
Absolutely.
Maybe there needs to be a forcing mechanism for that to happen.
It's normally legislation, right? Mike, what about you? What do you think the main barriers?
There was a very interesting report that came out from Stop Scams recently, actually looked at the barriers to data sharing. For fraud purposes, there is no legislative barrier. There's a carve out under the Data Protection Act, which implemented GDPR for the sharing of fraud. And in the new Economic Crime and Transparency Bill, there will be clear gateways for sharing of those suspected of financial crime. But so I think the legislation is there to be able to enable us to do this. That doesn't mean the rest of GDPR doesn't apply. It still has to be for the right purpose and with controls in place. Generally, I find it's just having confidence around sharing data. I think, as I said it before, because it's easier not to. So I think it's kind of that balance of it must be done for the benefit of the organizations that sharing and for the recipient community. And because fraud and financial crime now is 40% of all crime, this is the way that we're going to prevent this. So I think I re-emphasize Alistair's point about its willingness, because the laws there are good examples of this, and there are trusted third parties who take, like ourselves, and we're not the only data sharer, but who take on their responsibilities seriously around the data is hold. So I think it's I'll put a challenge back and say, if you're not sharing fraud data and financial crime data, you're part of the problem, not part of the solution. And that's what you should have in mind.
Claire, same question.
I think my point is probably going to come seamlessly follow Mike's point, which is that not just for data sharing, but I think in the kind of authorized push payment scam environment in general, it's going to require a really big shift in culture. So one of the biggest barriers to data sharing is a change in culture in both in organizations. But actually, we're talking about a large number of organizations in a very big industry and interacting with other industries that also need to go on this kind of culture shift journey, to not sound too, but I think it is a huge shift, and we do see some organizations getting there quicker than others, and I think that it's absolutely critical that the payments industry are at the heart of this culture change, because I don't see how we can bring other industries along with us on this if it's not starting where we are right now.
Absolutely. And David, sort of final thoughts?
Yeah, roles and responsibilities being very clearly defined and giving people the empowerment to access the data and the legal power to access that data, and data standardization. Obviously, I push for that. And the reason for that is so that people can, you get the data and you're not spending time trying to manipulate it, interpret it. It's ready to use to do what it's intended for.
Lovely. Listen, I think we'll round up the end of the webinar then. I'd like to say thank you very much to Mike, to Alistair, to Claire, and to David for joining us today. I think the audience will very much agree with me that I found it absolutely fascinating, and it's great to have people from different aspects and different angles of the industry coming together and coming to what is probably a pretty shared view that something needs to happen, and it needs to happen reasonably quickly. So thank you very much, guys. I think Kate from the Payments Association is going to come in with any sort of closing aspects we need to do. Kate?
Yeah, thank you, Philip. Yeah, just to echo you, really. So thank you so much, everyone, to all our speakers. It was a really insightful and inspiring session, and thank you everyone that attended today as well. If you have any other questions, please contact emily.beard@thepaymentsassociation.org. You'll also shortly be receiving a survey on the webinar, and we'd really appreciate it if you could complete this and provide your feedback. You'll also receive a follow-up email within 24 to 48 hours, which will have a link to view the recording of today. But on behalf of the Payments Association and our speakers, thank you so much for joining us today, and have a great rest of your day.